Today I want to talk to you about what may feel like a really big life transition moment. And that transition is a career change. Career changes have a lot of different things going on, a lot of different variables. It can be a really exciting time, but also a time that creates a lot of nerves and a lot of uncertainty. So I want to talk about a few things you should keep in mind, a few key financial planning topics that you should be focused on when you're going through this career change. The first is, let's talk about employer benefits. And specifically, let's talk about the retirement match inside the retirement plan. Most employers provide a match when you contribute money to their 401k or simple IRA plan. Now, make sure that you understand what your new employer's match formula is so that you can maximize all of that free money that your employer is willing to give you. Matches are not standardized, so your new employer very well may have a different match formula than your old one, so making sure that you ask and then maximize is a really important piece. Also, make sure that you understand health insurance, and specifically make sure that you understand the different waiting periods and potential gaps that may show up with health insurance. Many employers make you wait a few months to potentially qualify for their health insurance, which could leave you with a time period in between your previous employment and your qualification for health insurance with your new employer where you might have a gap. That gap can be filled by things like COBRA from your old employer, that's a continuation of your health insurance from your old employer, or you might have to go get individual insurance. But making sure that you ask those questions and are specific about when am I eligible for the health insurance plan can help you do some of the proactive planning to avoid a catastrophic event. Also, you'll have to make some choices around your retirement accounts at your old employers. And with your old employer, you really have four main choices with their 401k or other type of retirement plan. You can always leave the money in that old plan. If you have more than $7,000, the IRS actually requires them to allow you to leave it in the plan if you want to. However, that's many times not the best decision. It adds a bunch of complexity, you have to track down different accounts, and you're kind of left to the whims of your old employer and the decisions that they make about that retirement plan. Because of that, many people decide to roll the money over into an IRA or individual retirement account. That's a tax-free transfer because it's going from one retirement type of account to a different retirement account. But the IRS, because it's staying in retirement-based accounts, allows it to happen tax-free. When you do that though, you take control over those funds. It's an individual retirement account, meaning it's just for you, and you get more control, more flexibility, and have more investment options. It also typically allows you to work with financial advisors or financial planners to plan for your future. And if you want, they can professionally manage that account for you. So you can leave it in your old 401k, you can roll it to an IRA, or you could roll it into your new 401k. And many people like to do this just for the simplicity of consolidation. So you can typically roll your old 401k over to your new one and make sure that you only have one account then instead of two. Lastly, the fourth option, which many times is the worst option, is to cash the 401k out. You can typically request a lump sum payment where they write you a check. However, when you do that, it's taxable. And if you're under 59 and a half, you typically have a penalty associated with it too. It also disrupts your retirement plan, probably puts you off track, and is many times the worst decision. So making sure that you evaluate those different options and make the best option is really important. Third, we've talked about taxes a little bit, and let's talk about it a little bit more with your new employer. Making sure that you do the correct tax withholding where your new employer and your new paycheck is really important. Your new employer probably asks you to fill out a W-4. This W-4 is what allows them to input certain information into their payroll software and allows to make sure that they're withholding the correct federal and state taxes for you. However, we've seen it many times where clients have switched jobs, maybe they've made a mistake on the W-4, or the employer got something wrong, and it was nice because they paid less taxes throughout the year, but then they got a big tax bill, a big surprise tax bill when it came time to file their tax return in April of the following year. We want to avoid that if we can. And so making sure that you fill out the correct numbers on the W-4, and a really good way to do that too is to look at the IRS withholding calculator. It's kind of a cheat sheet, a website that you can put some information in, and the IRS gives you a recommendation on what best to do. The other thing that I want to talk to you about is income adjustments and making sure that you plan for income changes. Many times when you're switching jobs, you're doing it because you have the opportunity to earn a little bit more money. When you earn a little bit more money, it's really important then to reconfigure your budget to make sure that you're still being intentional about your spending. We've seen it many times where people have gotten a pay raise, but then they weren't intentional, they didn't adjust their budget, and that money just tended to disappear. They spent it on maybe silly things, when they could have used that increased income to plan for their future, pay off debt, or just be intentional about the spending and make sure that they really enjoy it. This also applies to things like bonuses. The bonus structure might be different with your new employer. making sure that you plan for those bonuses. You want to be conservative and smart about it, but making sure that you still plan for those bonuses, what you're going to do with that money to make sure that you get maximum enjoyment and maximum impact. And the last thing that I want to talk to you about today is mid-year changes. When you change jobs mid-year, there are some things you've got to pay attention to, especially as it relates to HSA accounts or 401k plans. The IRS has combined calendar year-based limits for how much you can put into an HSA plan, how much you can put into a 401k plan. When you change employers mid-year, this doesn't reset that amount. You don't get to contribute twice as much because you were at two different employers. You have a consolidated cap across both employers for both HSA accounts as well as 401ks. So making sure that you pay attention to that, because some of that's going to fall on you. Your new employer isn't going to know how much you put into your HSA already that year or how much you put into your 401k. So making sure that you track that and remain in compliance is really important. Otherwise, you have to go through a process of removing excess contributions at the end of the year. It should be caught on your tax return, but then you have to pay things like penalties and extra income tax that are really avoidable if you just do a little bit of tracking. So again, if you're changing jobs, the few things to pay attention to are make sure that you maximize your employer benefits, but also look out for coverage gaps. Make sure that you make the correct decisions about your old 401k or retirement plans. Make sure that you have the correct tax withholding. Plan for those income adjustments, and then be cognizant of mid-year changes and making sure that you stay under the caps. When you change jobs like this and you have a career change, this is many times a good opportunity to talk to a financial planner. A financial planner can help you navigate some of these changes and some of these opportunities to make sure that not only do you stay on the right track, but also that you make sure that you maximize the different opportunities that are in front of you. So talking to a certified financial planner, a CFP, making sure that you get the help that you need, this is a really key time to do that. Also, make sure that you download our guide. This guide walks you through more in depth what I just talked about and all those different opportunities and planning challenges that you have in front of you. So make sure that you download that guide, go through it, really read it, really make sure that you pay attention, and make sure that you check all those boxes to make sure that this career change to a new job goes smoothly.